What is up, my gurus? Thanks for tuning in to another one of these videos. Apologies for the lack of videos over the last couple of days. I'm coming back with another video, and basically I'm going to use this video to keep it technical, keep it on the charts, have a look at what we're looking at in terms of the micro and the macro, bit of an intraday analysis as well. I'm not going to make this about the fundamentals, and the reason I'm not going to make this about the fundamentals solely is because I'd like to do another video where I can discuss not only the fundamentals but how it's affecting the macro economy, how it's affecting global reserves, and what it's doing to the markets as a whole, and obviously with a lens that is specifically on crypto. So basically, the first things first, of course, as you know, today is a huge day as far as macroeconomics go. Today is the Federal Reserve's economic projections meeting. So there's going to be a huge Fed press conference. As you can see here, guys, basically this is an economic calendar. I will post the link for whoever wants this. Very, very cool calendar. It just sort of keeps you up to date with what's happening in the States, what's happening from the Fed, and then it also shows you the sort of market impact that it has. So you can see here, guys, federal funds rates, the Fed meetings, the economic projections, and then obviously the press conference to follow, where Jerome Powell is going to give his analysis of the market. This shit gets really scary, to be honest, in terms of the impact that it has on the market. I think we're already seeing the volatility that's leading up to this event. Let me pull up the charts quickly so I can, we can sort of just see what I'm talking about there. As you guys know, in the channel earlier, I did mention that we were looking at a breakout of this trend line, which we did get, and I think that this large volatility is what we're seeing in preparation of the event. Specifically with this massive candle that happened overnight, I mean, this would have absolutely wasted a number of bears, that's for sure. So, and interestingly enough, it even broke this sort of yellow trend line as well, and then came back down to literally where it started in the matter of, I think it was 2 hours. We can check that together. But yeah, I mean, we're sort of seeing the volatility already as it goes. So yeah, I think that the main thing that we need to obviously take into account, let me just quickly go, I'm going to just open up the bigger indicators as well. I'd like to also switch up the time frame. And basically, I think what I'd like to look at here is the range that Bitcoin has been in. It's safe to say that Bitcoin in the large time frames has definitely been ranging in this sort of zone. It looks to be ranging between roughly the 46 zone and anywhere between the 34 and the 32k range. These are obviously like way down at the bottom. These are the results of Wix, and I don't think that they are sort of the true indication of where the range is at. You can now see that it's starting to form somewhat of a flag. Sorry, let me just draw it in here so that you guys can see. And this, again, this is the daily, so it's starting. It looks like it's starting to form a flag. We're definitely going to see a big move in Bitcoin. There is no two ways about it. We're going to see a big move in the market. It's gearing up for that, and I think that it's safe to say that this major volatility is in preparation of that. There's a lot going on in the market. I think that most of the retail money is scared. I think that most of the retail investors are really scared as to where you put your money, because now with everything that's going on, the real question is, where do you put your money? Where is your money safe? So I think that the main thing to look at here is obviously there's something called a risk on and a risk off asset. Crypto would obviously fall into the risk on sort of category. Bonds would fall into a risk off category. And the reason why I say buying bonds is a risk off is because that's what the government does when the government's in trouble, is that the governments will buy back bonds. So there's always a nice little bit of surety around there in terms of how to protect yourself in this macroeconomic volatility. That being said, I don't think that crypto is the bad play here. Again, I think I've mentioned this a few times. We're now in the midst of a change in the world order. For those of you that were following the channel, I did share Ray Dalio. He's a legend. Ray, first of all, that guy's videos are incredible. For those of you that don't follow or haven't seen his videos online, do yourselves a favor. It is incredible. The guy is an absolute genius, and his sort of take on how to deal with the change in world order is incredible. So one thing that we've got to realize here is that when we're looking at how these world orders change, we've got to understand that a lot of it has to do with reserve currencies, because remember, the economy and the country with the reserve currency, and all the reserve currency means that your money is accepted everywhere. And as we know, the dollar is the world's reserve currency at the moment. It was the British pound before it was the dollar, and before the British pound it was the Dutch guilder, actually. So basically, again, all of it is really plain to see in that video. So for those of you that haven't watched it, I do implore you to go and check it out on the channel. For those of you watching these videos that aren't on the channel, please check for the links below, and please join the Telegram channel, because there's a lot of insight that happens in there. there that I don't necessarily cover in these videos, but that are very important in helping us understand and come to grips with sort of macroeconomic factors. The funniest thing about this whole move in what's happening at the moment is everyone seems to sort of be a macroeconomist now. And I think it's safe to say that if you don't have a grasp on macroeconomics, you are basically just a retail shrimp in the sea waiting to be eaten by whatever fish is bigger than you. It doesn't even have to be a whale. One of the big guys on Twitter, CryptoBurb, I'm sure you guys have follow him on Twitter, for those of you that are a little bit deeper into the game. He said something so funny. He said something like, if people spend as much time focusing on their trading as much as they do, commenting on other people's channels, like, your crypto banters and whatever, they'd do much better. And some guy commented in there, and I love this comment. He said, who am I going to make money from if the average traders learn how to trade? And that is so true, because there are so many pros who aren't necessarily on Wall Street. They're sitting at home trading, and they're taking all your money every time you get liquidated. I mean, if we go back to, go back to the chart here on the 4 hourly, that candle that I was showing you was massive bearish liquidation. And I can tell you now that the people who suffered the most there were, the people that suffered the most there were basically the retail traders. It's the people that sort of, they're taking guesses. They're like, oh no, I know where the market's going. I know exactly what's happening. They take these bets. A lot of the time, a lot of these retail traders are literally trying to recover losses. And most of the time they're trading emotionally, so they're seeing this and they just don't want to miss the bearishness, or they don't want to miss that big volatile move. And it actually just results in them, going wrong. It results in whales coming through and absolutely liquidating them. You guys have to understand, I think that's something that's important to understand, is the amount of money needed to do this, what we're seeing here, this massive liquidation candle, this liquidation event. It's a lot of money. It's either a coordinated bunch of trades where, you've got your CME traders, you've got your traders in South Korea who all coordinate and they can create these liquidation events, but it takes a shitload of money to move a market that is as big as crypto. So that sort of brings me to my next thing. I'd like to just look at the totals. I mean, we haven't looked at this in quite a while. For those of you that don't know what we're looking at here, we're looking at the total market cap of the entire cryptocurrency industry. It's currently sitting at 1.75 trillion. At the top, at the height, we had just surpassed 2 trillion, which pretty much put us in there with the top 4 in terms of market cap. So above Facebook's, above the Apples, above the Teslas, etc., etc., etc. But obviously now we're sort of ranging down at the bottom here. Not a terrible thing. I mean, I think everything is sort of in this position. We've got a nice little trend line forming here. Could even be a little bit tighter, like so. But I think that we are definitely due for a big move here, guys. I think that we're going to see a lot of volatility coming off the Fed meeting. The odds of Jerome Powell, sort of hiking the rates here is very high. I don't think that it's going to be as high as we initially thought. It's probably going to be somewhere around the 25 BPS range, and I think that is sort of understandable. The question here for me is, how does the market react to a situation that it knows is coming? So if the market correctly predicts something, usually that results in a bullish spike. If the market under predicts and then it goes over and above predictions, then we see a huge spike. And then obviously if it's way past predictions in the wrong direction, we do tend to see a lot of bearishness, purely based on the fact that people are scared. And I think this is another really interesting index to look at, guys. This is the fear and greed index, basically. It's a volatility index on the SPY. So it's a volatility index on the stock market, and obviously on the best performing assets on the stock market. So pretty interesting to see that we are basically looking at quite a slump in the volatility, which has been quite recent, but I do think that we're going to start seeing an increase in that, purely based on the Fed meeting today. So just to sort of pull back here, we're looking at, these are the times that take place in America, if I'm not mistaken. I think this time would actually be a local time. Let me just quickly have a look at that. It could be that it's in our time zone. Yeah, GMT +2. That's perfect. Yeah, so this is basically going to be at 8 p.m. our time. Sorry for all this swishing around here. I'm just trying to find the right stuff. There we go. So yeah, 8 o'clock our time. So guys, for those of you that are trading, for those of you that are keen to trade this volatility with me, I do invite you to please just be on the stocks with me and on the channel with me around the 8 o'clock zone, because I do think that we are going to see some very, very interesting moves in Bitcoin and some very interesting moves in the stock market as well. Unfortunately, guys, fact of the matter is the stock market is still running crypto. It's still running the way that the crypto industry is affected by the stock market, you can see we're getting a nice little pump. All of this sort of volatility is purely speculation around the Federal Reserve meeting. It's purely speculation around what Jay Powell's going to say, what he's going to do, and what his approach is going to be. Something that I've covered quite extensively as well is that there's also a chance that they may not hike the rates as much as we thought, purely based on the fact that there is this massive situation happening in Russia. And you've got to understand that at the end of the day, they have to make sure that if a war broke out, and it's not like, I'm not saying a war is going to break out, but, the way that these guys think is that if a war ever did break out, they need a lot of money in order to fund that war. And that's what's going to result in some printing. I do think that we might even see him lean into a bit of printing tonight. I'm not too sure exactly how that sounds or how that's going to play out. But one thing's for sure, I do think that the Fed are definitely not going to clamp down on inflation like they did. Guys, please remember that all inflation means is that, coming out of pandemic, and this has happened every time in history. So whether it was the 2008 crash or whether it was the, in the 70s when the States did run out of money, again, just pull back to that video, guys. I highly suggest you all watch that video. But basically all inflation means is that when they print money, when they inject money into the system, everybody all of a sudden has money. Lending goes through the roof. People are lending. The banks are happy to give it out. Because remember, what the Fed does is the Fed buys bonds from the banks. And what that allows the banks to do is to effectively lend government-backed money to the people. So there's like no worry about, can we repay this? It's fine. The government's saying, we'll take on the debt. Here's the money. Go for it. And what that does in turn is that all the people who own properties, all the people that run supply chains, they realize this. Everybody has more money, which means we're going to charge you more for what that is. And that is all inflation is. So what they now need to do is they now need to taper inflation. They now need to make moves that can squeeze down the economy and put us back into sort of a cycle. One of the things I'd love to do, I'll share it in the group as well, is that another thing that Ray Dalio speaks about is the general way that the market economy works. And it basically works in troughs. Let me see if I can, I would like to find this for you, but I'll just draw it onto the charts. I think that's probably going to be best, because I'll show it to you like this in an empty chart. So basically, and my apologies for this sort of like off the cuff thing. I'm going off the cuff with these videos because I want you guys to see how I look at the charts and how I analyze. And obviously this is more of like a an open conversation with you guys. If you guys are ever keen to do live YouTube videos where we can do like questions and answers through the video, I'd be more than keen on that too. So let me know in the chat if you guys would be keen. But this is effectively what market cycles look like. They go up and they go down like this, right? So it's always going up, by the way. You must note this. That straight line represents the way that the economy grows through things like education and through how the economy is stimulated through the growth in technologies and how society gets better, etc., etc., etc. This whole line is not a way to tell whether the economy is doing well or not. It's this line. This is known as the debt cycle. And what happens is inside the debt cycle, and guys, Ray Dalio explains this perfectly, but for those of you that aren't going to watch this, you can just pay attention here and understand this. Basically, this debt cycle goes like this. We earn money, we do great, society does fantastic, things do not go so well, and we need to go back into, sort of tightening belts and making sure that we can afford to repay the debts that we've accrued in this cycle, because all this cycle is about is debt. A successful economy just means that you can borrow money. That's all a successful economy means. And in order to inflate a successful economy, they print money so that people can lend money and take more credit and take more debt. But eventually it gets to a point where, it's like, hey guys, alarm bells everywhere. People can't afford as much as they used to. And now we are in debt and we need to sort of tighten our belts and take care of that debt. And that's where this sort of trough comes in. And inside here, you've got all these like little mini cycles that happen, little mini troughs and mini valleys and peaks, etc. And what happens is a lot of people get like really, really caught up in any one of these cycles that can take anywhere between 5 to 8 years, and they forget to sort of zoom out and look at where we are in the big cycle. And these big cycles can take 10 to 30 years, sometimes 40, sometimes 100. It just depends on the way you look at it. And personally, I'll probably put us at like here, I'd probably put us somewhere around, we're definitely entering into the part where we're going to have to repay some of the debts that have been accrued over the last 20, 30, 40 years to get us where we are now. The last time that there was a massive move in terms of injection of money into the economy to try and keep the economy afloat was 2008, where they needed to actually just print a whole ton of money to keep the American system afloat. Now what's happening is we've got a literal threat to the petrodollar economy, because what's happening now, China and Russia are basically turning around and saying, well, you know what, we no longer want to be so reliant on the petrodollar. We'd like to now take matters into our own hands, and we would like to change the world's reserve currency. Syria, for example, have now said that they will only accept ruble for their oil. Guys, there is massive changes going on in the global economic system. It is ridiculous what we're looking at. I'm quickly just going to look at one more thing I'd like to have a look at, just in terms of the charts and just in terms of the technical. So for those of you following, I'm now looking at the weekly chart. Let me just open this up here so we can look at it nicely. We're now looking at the weekly chart in Bitcoin, and what I want to do is sorry guys, I just want to move it like so, and then I want to zoom in here. Right, so we're looking at the weekly. You can now see that, you know, my initial projection as to, you know, it sort of forming an M shape going up is changing, because we're dealing with a whole bunch of socio-political, geopolitical, a number of fundamental factors that is just making it really hard for the economy to take off. And to be quite frank, you know, the last couple of months have been shit. There's no beating around the bush. It hasn't been a great month to be in anything. I feel sorry for people who entered the market in January, you know, and there's so many people who entered the market in January. It's scary. I mean, imagine entering the market here, getting super excited that you've made the investment of your life over here, you know, only to run into what we've been seeing for the last 3 months. So it's hectic. There's no two ways about it. We've just got to deal with it as it comes. I think that the smart way to trade these zones is to actually start scalping, where you're looking at trading smaller ranges, smaller sort of quicker trades that are in and out type thing. Like you saw the volatility this morning, it would have been a quick in and out. We're now looking very good, by the way, on the XRP trade. I think as soon as dominance comes down, I'll get into that just before we close the video. But there is one thing I want to quickly have a look at, and that is one of my favorite indicators, which is the bull market / bear market resistance support band, whatever you want to call it. We're obviously well below this thing, guys. In order for us to ever get bullish, as I've said many times before, and as Ben Cowan, for those of you that don't know, please go and watch Ben Cowan's videos. The guy is a genius in terms of TA. He really one of the best in the game. But he basically, you know, I mean, at the end of the day, there's no point getting excited until we're above this band. We have to come above this band, we have to confirm it as support, and we have to go up from there. This is the only way. Until we do that, this thing can range and we can sit below it, and, you know, there's calling a spade, we're in a bear market. So that is just what it is. I think that the best and smartest way to trade these zones is, like I said, to scalp small ranges, look for the opportunities, and then obviously try and capitalize on those. In terms of the alt market, I just want to quickly have a look at Bitcoin dominance, which is on the rise again, of course. And the only reason it's on the rise, guys, you have to understand, is simply purely based on the fact that it is, you know, we're seeing a volatile move in Bitcoin specifically. And when Bitcoin moves quickly, Bitcoin absolutely dominates. When Bitcoin chills, the dominance comes down and the money flows out of Bitcoin and into altcoins. So the real smart way to trade these zones is to buy Bitcoin first and then alts later on, depending on how they do. Alternatively, you can take bets. If you know Bitcoin's going to do well and chill at the top, then you can enter into alts while they are still low, obviously taking the risk that you might get stopped out in events of volatility. But if you do have a wider stop loss and you can allow yourself that, then you can obviously stay in the trade for longer, because it will eventually turn bullish once Bitcoin sort of chills out at the top area. So you can sort of see, I mean, we had a breakout of this area here. Let me quickly just turn us back into the daily. I would also, another thing is, for those of you that are trading, please don't waste your time, you know, looking at any other time frame other than the daily time frame. You can look at the 4-hourly time frame, but in general, unless I'm trading, I keep my time frame purely on the daily, for the simple fact that it would just drive me crazy seeing the volatility, and then you can get stuck into FOMO loops where you feel like you missed out, etc, etc, etc. So, you know, we saw this sort of breakout of that trend line. We've now got another support trend line that's forming, as you guys can clearly see. It's pretty clear there. I mean, give or take like that. So we're gonna have to see. I mean, in order for me to sort of get really bullish on the alts again, Bitcoin dominance needs to come way down, and that'll allow the sort of a mini alt season to come off the back of a nice Bitcoin pump. But again, guys, unfortunately, we're at the mercy of the stock market. More than that, we're at the mercy of huge fundamental events, and I just think that there's no reason to get too caught up in the market now. For those of you that are quite heavily invested in crypto, and for those of you that do live off crypto, I would honestly go and say the following. For those of you that are looking to create passive, stable income, is to basically move your portfolio into stable coins and stake those stable coins. There's just no two ways about it. If you're looking to make a living off crypto at the moment, that's the only way to do it. In terms of day trading, unless you're really good and you know what you're doing, you can see I give a trade every now and again, because there's no ways that I'm going to risk anyone's money taking these like risky volatile trades. Unless you're sitting with a massive amount in the bank and you've got huge collateral and it really doesn't matter, and your liquidation points are so low that it really doesn't matter where, you're not going to get stopped out basically. I think it's smarter to just sit back and enjoy the show, because that's all it is. This is a massive show. We're seeing a change in the global economic system. And as a side note, I do think that in the next couple of years, we're going to see Bitcoin be named as the global reserve currency, so that every country in the world will accept Bitcoin, and then their CBDCs will be, based on that. So a country will buy reserves in Bitcoin, a country will have reserves in Bitcoin, and that will obviously dictate how, the wealth of that country. And on that note, Russia's been accruing Bitcoin for a very long time. El Salvador will become the new Switzerland if that's the case, because those guys have a shit ton of it. So it's interesting. It's interesting to see. It's going to be really interesting to see how it plays out. And I think that a big concern for a lot of these countries and a lot of the central banks is how are they going to deal with stablecoins? How are they going to deal with Tether? How are they going to deal with the fact that Tether might not have the reserves that they say they do, in order to float a lot of the reserves that they say they have? So, for example, nearly all of the trading that happens in the world on these exchanges is basically using Tether as reserves, and it's a really interesting time to sort of see this and watch it play out. And I can tell you now that there's a good chance that the governments are going to try and ban stablecoins purely for the fact that they're going to want you to only ever use their stablecoin. So if you're trading crypto in America, you're going to use the dollar. If you're trading crypto in Korea, you're going to use the Korean yen, or whatever the case is. The same goes for Europe. You're trading in Europe, you're going to use the digital euro, etc., etc., etc. So really interesting time to sort of be in the market, really interesting time to follow the market. And again, I think, guys, the main thing is to just take this time as a learning opportunity and try and come to grips with it, because I can tell you now that on the other side of this, you're going to be much smarter for it, and I think these experiences are going to make much better traders of everybody. So that's pretty much the way I see it. If anybody's got any questions, you guys can obviously ask me in the channel anytime you want. I'm always there. I will do another video that won't be on YouTube, that's going to be a little bit more about what I think is really happening in terms of the sort of the macroeconomics, the geopolitics that we're seeing, and where I see all of this going in the next sort of 5 years. What's 2030 going to look like? Are we all going to have Bitcoin? Am I going to pay my electricity bill in Bitcoin? Is the new Swift going to be Ripple? Etc., etc., etc. I think that the Ripple is definitely something to keep your eyes on. And if we're looking at a few what I'll do is I'll end this video off with where my eyes are at and what I'd be looking to buy at these zones. Guys, AVAX, I think it's starting to make itself a fantastic use case for one of the best blockchains to use in the DeFi space. Obviously, guys, we saw Phantom, after the whole thing with Cronje and that whole Daniela sister and all that stuff. It's really, really sad to me, because at the end of the day, Phantom is such a beautiful blockchain. It's brilliant. I mean, it's so cheap to transact on it. And yeah, it's really suffering off the back of that news, and a lot of the people that were using the Phantom ecosystem have stopped using the Phantom ecosystem purely based on the fact that they had to look elsewhere when Cronje closed up all of his exchanges. Really, really sad. I would still buy Phantom, to be honest. This could be a great level to buy Phantom. I mean, Phantom is now at lows that we haven't seen in quite a while. It's obviously a little bit below this sort of resistance. We lost that support level. It's now turned into a resistance level, and we're going to just have to see where it goes and what happens. If I'm not mistaken, it does look like there's a bit of a sneaky trend line forming here. Let me just see how exact that might be. Yeah, not too terrible. Again, guys, also trend lines don't always have to be exact, by the way. Some of these liquidation events do evade trend lines, and then you'd think to yourself, you'd go and widen out this trend line to compensate for it, which you could do. But a lot of the time, if you see it matching up like I did before, that also can give you a very accurate representation. So we're probably getting a lot of support on that. Let's see if we can find the rest of the channel. So it's more of a downward channel than a sort of triangle or descending flag or anything like that. You guys can see, and I'm just going to put this out there. Please just have a look at the last time this happened in Phantom. So descending channel, probably some good news that came out was, look, this was off the Bitcoin pump. It was the Santa rally, but still, I mean, that's a massive, massive pump in Phantom. That's from almost $1 up to nearly like $3 at the peak, or just over $3 at the peak. So who knows? We could maybe see something along the lines of this. Again, it's all going to be Bitcoin dependent, and then even more than that, it's going to be stock market dependent, and then even more than that, it's going to be J-Powell and Russia dependent. So there's so many different layers that are dictating our lives basically at the moment. All we can really do is just, sort of sit, get the popcorn out, and enjoy the show. Guys, before I go, I just want to quickly say, Matic. This token has held its own like an absolute beast through all of this. It hasn't sunk below the 1.3 zone. I mean, what more of a use case do you want? What more proof do you want for the genius that is Polygon? I think in terms of layer 2 L2 solutions on Ethereum, for those that aren't too sure, please go back and watch the videos where I have spoken about that. But yeah, in terms of L2 solutions, for me, it's Polygon. And then the last one that I'd like to look at is Immutable. That's this one over here. It's IMX is the ticker for Immutable. Obviously, it's down in the dumps, as is everything here. But I do strongly believe in this token. I strongly believe in the ecosystem that they're creating, purely based on the fact that it is going to help a lot of NFT companies rise and basically manage their own sort of funds and manage the way that they are managed, or manage the way that they are sort of dealt with in terms of the blockchain and smart contract deployment, etc. Also huge with gaming. So I do think that it is something to keep your eyes on. So between Immutable, Polygon, Phantom, and then the privacy tokens as well, guys. Monero, you can't go wrong. You'll actually see now Monero is holding its own again, because as we get deeper and deeper into regulation, privacy tokens are going to be where it's at, because you're going to want to keep control and retain control of your finances, and privacy tokens are going to be a great way to do that. Guys, with that, I'm going to close up the video. If there's anything that I missed out that you guys do want to hear more about or want me to talk more about, please just let me know in the channel. We can always discuss it in there. I'll start working on that separate non-YouTube video for the guys that are keen. I love that kind of stuff. My mind's always working on where these things are going. And the funny thing is, a lot of the things that are happening today, I knew would happen since many, many years ago from watching different, paying attention to different sources of alternative media and alternative information. That sort of give you a little bit of a glimpse into where we're at and where we're going. So yeah, please let me know if you guys want me to put anything else. Otherwise, I will be in the channel all day long. Let's quickly, just before I wrap up the video and close it up, I just want to quickly see the Bitcoin thing. I'll let you guys know where I do see it going. Let me just bring it back into the 4 hourly here. And let's just quickly take a look at a couple of indicators. So, sorry, I just want to zoom in here. There we go. Let's just make this nice and big so everybody can see what we're talking about here. Okie dokes. So yeah, I mean, as we saw, big breakout. Let me move these two paths away. I'll just delete those. I think obviously the orange path is a lot more viable than the red one. And yeah, I think just to look at it here in sort of this lens here, we saw a little bit of a breakout of this green line. I'd probably like to see a retest somehow. It did retest in the hourly, so in the hourly it did come back. I'll show you guys. We can actually see it nicely in the hourly. It's going to blow up the thing. There we go. So you can sort of see it went up, came back down. It didn't really retest, but it seems to be forming a bit of a flag at the top here. In the hourly. So interesting times in Bitcoin. Again, this is all purely volatility that's coming straight off of the speculation around the Federal Reserve meeting. For those of you that have watched this far, thank you so much for tuning in. I'm probably looking at more bullishness. If you ask me, my personal sort of opinion on where things are going, my personal sort of bias here is that we're about to see some really bullish stuff. I think that J-Powell's going to come in and say that they're not going to screw the market just yet. They're going to kick the can down the road again, and we all know how much people love hearing that. So let's keep our eyes open. We've got quite a heavy resistance line over here. This yellow line, as you guys can see, it's acting as quite strong resistance as it has been. And the only thing that I wouldn't want to happen to us is that we see a breakout here, we trade the breakout only to get liquidated back down again. There would be no point. I would actually need to see that it comes up, comes out, and then stays up and out of that, because it's been in this triangle for a long time. We're now seeing triangles and triangles, and when you see shapes within shapes, all that says to me is we're moving towards an explosive move. So stay tuned, guys. I will obviously be here. 8 o'clock's the time to be aware. And yeah, if you guys have any questions, please just hit me up in the channel. Thanks for tuning in.